Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys all had an amazing trading day yesterday. We are down about 15 points this morning, as the S&P is selling off a little bit, maybe a little bit of a head and shoulders pattern on the hourly chart is what it appears to be forming. Also down about 40 points in the Nasdaq this morning, but some good moves off of yesterday's price action levels. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell so you get the alerts and the updates as they happen. Quick reminder for y'all about our free preview week, October 20th to 25th at TradersArmy.com. You're going to get access to a little peek behind the curtain, so go to TradersArmy.com and sign up for a free membership, and you will get the information on how to join us. Also, I've had a couple people asking me about a live daily market commentary. We're actually going to do a midday live commentary here on YouTube. So if you're watching us on YouTube, we're going to do a YouTube live Thursday. We're going to do it at noon Central Time, so 1 p.m. Eastern, 10 a.m. Pacific. But we're going to do a midday kind of checkup so that we can take a look at what the markets are doing throughout the day. I think it'll be fun. So I'll put the link to that in the pinned comment section down below so that you can join us. All right, let's dive in. S&P. We rallied yesterday, got to this gap fill area, actually popped a little bit above it. And I was thinking that we may get a decent breakout up here, but we only got one touch, right? Our rule on a breakout is I need 3 touches, and on the second touch is when we pop through. So it didn't really qualify for any sort of a breakout, but this does have the shape of a head and shoulders, if you will. Not quite precisely, but it definitely has that look about it. And prices are coming down pretty well at the moment. Now, when I look at this area, I look at this as the origin of the move, and so could be a decent little reversal opportunity if price comes back into this range. This is the demand level we talked about yesterday. So really, price didn't do a whole lot yesterday. It just stayed between our areas of demand and supply. Same thing in the Nasdaq. This was our Nasdaq levels. We may get another bite at the apple somewhere up in here. So keep an eye on that. Nasdaq and S&P look very similar this morning. Crude oil. So crude oil yesterday. And leave me a comment down below. Let me know if you're able to catch this trade. Crude oil came into our level. We got a really nice move away from our crude oil zone. And so remember, stops got to go above that pivot. So crude oil trade worked out pretty well if you were able to catch that one. So let me take that off since that level's already made its move. We still have our other supply level there up above us. But if you did take that trade and you're still in it, I think now it's safe to move your stop up above those two candlestick little tweezer tops, if you will. They're not really tweezer tops, but those 2 wicks to lock in some profit, as that one is working out pretty well. And then as far as demand below us, when I look below us, I don't really see any super quality demand for me to lean on. So I'm just going to leave that supply level intact. If we get some basing below here, we could get a breakout, but we need to have 3 touches for basing below that level. Gold actually was a pretty good little setup, as we did get our basing, a little bit of basing here, so you could have taken the breakdown. And if you wanted to, then you got another opportunity at the long off of this area. So gold worked off the breakdown and then came back down into our demand level, and we got a really nice rally off of the demand level from this zone. So gold is still running out of that level. Need to remove it at this point since we've already used it. And I don't love any of this supply, so I'm going to leave this supply be. I do have a good one up here that price may make it back into. If we pull back later this morning, you could get another bite at the apple right here on that wick over wick area if we get a pullback. So keep an eye on that. In the bonds and our currency markets, so the 10-year note came right into our demand level, and we got a really nice move off of our 10-year notes demand level. So if you had that trade set up, that one is working very well. at this point, take your stop and move it to break even to lock in, to remove any of the exposure and the risk that you might have. So I'm going to take the lines off of that level, but that one is working out extremely well as the 10-year note has moved up nicely off of our demand zone. And this would be our target, would be the supply area up here. This would be our eventual target. Technically, our first target we should be hitting our first target right now. So maybe take some off the table at target 1, because this is definitely the opposing supply. In the Aussie, so the Aussie trade that we identified yesterday off these 2 wicks, price did come into there later in the morning. We got a nice little move away. Didn't quite touch the opposing demand area, but we did get a nice little move away. We've now got a second move into that level, so that level's no longer going to be valid. So you're going to want to remove that trade, but that one did work out for the better. And so next step would be to see what happens in this area here. Now, this one has to be a confirmation entry, primarily because our bigger picture is trending down, and we based above there already once. So it's a significantly weaker level. Just keep that piece in mind when looking at the zone. In the euro, so the euro level, unfortunately, this one did not work out the way I expected it to. As I was really hoping for that euro breakdown off of this base, we broke below it and then just popped up through it. And I mean, this is definitely a fair price value area, but it's been one of those ones that chopped around through. So that one's a small loss relative to the reward potential. The other ones worked out really well, but that one definitely, the breakout just didn't hold true as I was looking for that to give us a better move down. So now if we get some basing somewhere up in here, we may get a better opportunity. Looking at the Canadian dollar, yesterday we're still kind of in this range in the Canadian dollar, just chopping around here. It's not really done anything one way or the other, and that's kind of what we spoke about yesterday. And so your better level is still this area way up here for your supply. In the overnight, we did put in this little double wick up here, where you may see another opportunity off that little double wick area. Last but not least, Great British Pound, Japanese yen. We are seeing the pound fall off. We were looking at this as a potential for a breakout if we got some basing up in here. Well, the market just went exactly the other direction, as we're seeing strength in the dollar this morning, which is why we have our weakness in the S&P. And so this would be our supply level. And then in the yen, we had put in this as a potential demand, and the market came right down to that area. We got one little bit of a move away, and then it broke right through it. So the yen and the euro did not cooperate, but gold, crude oil, the Aussie, and the 10-year note all did. And so overall, it was a pretty decent day, depending on your position size in each one of those. So take a look at some of those levels. If you've got any comments, please leave them in the comment section down below. Love to hear from all of you that are watching. Until tomorrow, have a great day. I will see you soon. Later.